I'm Dave Master. Until last year, I was the Global Chief Marketing Officer of Janus Henderson Investors. I'm doing quite a few panels over the next day or so. But today, or right now, better said, we're focusing on the topic of personalization. And I can't think of a marketer anywhere to whom that is not an interesting topic. If for no other reason, we've been talking about it for, I don't know, 15, 20 years. It's almost to the point where you start to wonder what's real, what isn't real, are we ever going to get there? And a lot of that is the focus of our discussion today. So we're really very fortunate to have two practitioners, and I'm going to push them on the practical stuff, not the theoretical stuff, right?
Sounds good.
Not it's coming, but this is, we'll talk a little about that. Jill Perlberg, to my far right, is the Vice President of Content and Client Marketing at Northwestern Mutual. We heard a big picture this morning. Now we'll get a more focused picture. And Emily Stewart is the Director of Digital Marketing and Analytics for Growth Strategies at Meritrust Credit Union. And I think it's very interesting to have them both on the panel because the firms are very different in size. And I think you'll find there are, on the one hand, some contrasts, but there are also some real strong parallels as well. And I think that's where you learn a lot when things intersect one another. I already said I'm going to push them to be practical, so we're just going to jump right in. I'm going to let them each tell you more about what they do, and then I've got a series of provocative, hopefully interesting questions.
Ooh.
Dun, dun, dun.
I changed them all just so you
Fantastic. My compliance team doesn't like that.
No, well, we won't tell them. Please. Jill, you go first.
Sure. Jill Perlberg with Northwestern Mutual. My teams are responsible for driving new client growth and moving prospects through our sales funnel. And then for those who heard Lynn this morning, we are also responsible for driving deeper relationships with our existing clients. So our clients, typically our clients, we say for life. On an average, it's a 40-year tenure of someone who's a client with us. So our responsibility is to not only nurture and engage them and turn them into an amazing advocate, but cross-sell, upsell, and drive a deeper share of wallet. I also have our content and thought leadership teams who fuel our entire funnel, all the way from upper funnel down to our client marketing teams as well.
Emily Stewart, I am with Meritrust Credit Union. By contrast, our asset size, I don't know if you guys do asset size at Northwestern Mutual, but $2 billion, so much smaller than a Northwestern Mutual, but a big market player, largest credit union in the state of Kansas, and I'm out of Wichita, Kansas. So wear a lot of different hats in our growth strategies team. I'm responsible for our CRM product development, our MarTech stack, marketing automation, anything related to buying media and buying our digital media especially, and our customer centricity model. So we look at our customer lifetime value. We focus on very similar things, attrition, retention, understanding what our customers want and need, and what they really look for. And one of those things is really diving into personalization and how do we really achieve that without being too creepy, but also not being generic and just putting billboards up everywhere, hoping that they resonate with the entire community.
So this is perfect, and you're stealing some of my thunder. So this is a lot of words for the first question to give you both a big platform to talk from, really. So I'd like you to start out by defining what you even mean by personalization, because it doesn't mean the same thing to everyone. And as part of that, talk about the creepy factor, because that is actually a documented reality for many people. That I didn't make it up, you didn't make it up, there's a reason we know about it. And then how do you find the balance between personalized messaging and trust with the customer? Because I think if you start to talk about those issues, it really gets at the philosophical sort of circle around the whole topic.
Yeah. So I think your question's great. So from a personalization definition, for me, it's playing back the relationship of what we know about our clients back to them, right? So right message, right time, right channel, but very much driven to the outcomes of both what our client and we want to achieve. And so, we might do that based on their demographics, based on where they are in the funnel, and then the depth of the relationship they have with us, the products that they own, the behaviors that they take. And I think, David, to your point on trust, for me, personalization either builds trust or it breaks it, right? So if you don't do personalization right, you actually hurt yourself more than had you not tried to do it in the first place.
Yeah.
And I think, it can't be, back in the day, people would say personalization is like you put Jill in the email, so we personalized it. And so I think we're well beyond the table stakes of that. And really it needs to be how we play that relationship back to them in a B2B to C environment. We not only have to play back the relationship that someone has with us as a firm and the products that they own, but also that relationship that they have day in and day out with their financial advisor. And we can't get in the way of that, right? So it's trust building not only with our clients, but it's also trust building with our financial advisors that we are going to be good stewards of the information that we have about their clients and show up in the right way to not get in the way of their processes.
So an example of that would be, for like if I were on the website and I was interested in investments and I went back a couple times, did I trigger something?
Yeah, I think, so a great example of that is if you start your journey on one of our financial advisors' websites, and you may come to northwesternmutual.com from the broader brand, that advisor's branding, their contact card, and anything from a lead generation standpoint goes back to that financial advisor. We maintain persistency on that to be able to carry that person through. And I think, again, that builds the trust not only that we are playing back, that we knew that you engage with one of our financial advisors, but for the financial advisors, they're not concerned that they're going to lose leads or lose traffic to other people or to the brand who it might, distribute it to someone else.
So Emily, does what Jill say resonate? What she said
absolutely.
Seem familiar?
Yeah, so from a full services financial institution, checking accounts, it could be 18-year-olds coming in to, someone looking for wealth management advice. That full service relationship has a lot of data that's built underlying data, and data that they're telling you about that we don't necessarily have to buy from a third party or use cookies just to be able to advertise for that. They're literally using their debit card every day with us and telling us how they're living their lives. And so we take the approach of leveraging that data to be able to build personal, I'm going to call them personas, but I really just mean way beyond personas, right? Because personas, you still clump people together. This is really looking at the individual down to the individual level. And so for us, kind of back to your question about the creep factor to where to kind of how far do you go in the personalization scale, if you will. I think that it's back to what you said, which is they're telling you this data, so they expect you to provide personalization. And I've had that actually kind of blow up in our face before, where members have come back to us and said, why did you email me for a checking account? I already have one.
Right.
And so they actually get upset if we don't use that. Now, there's other types of data that maybe we get from someplace else, like life event data that we leverage that says that maybe we expect this person that just got engaged or just got married or just moved. That's not from our data source. So that's when we go out a little bit further and do like life health checkups and have our staff has conversations with the employees. So we know that they had a life event. We suspect that it's something like maybe they just got married, but we're not going to send them a mailer that says, we know you just got married.
Right.
That's
creepy.
That's the creep factor. And so I'm looking at this as how reliable is the data? Did they tell us this information? That one-to-one relationship with the data? Then yes, let's use that to our fullest advantage with the experiences, the workflows, the emails, every experience that they touch with us, let's leverage that. But if we're receiving it outside of that, then we go a little softer with the messaging, softer with maybe the images. Maybe I have a couple, in the image, and I'm advertising to them, and they get a call for a life checkup. But that's how I look at that, is if we have the data and we know it to be true, then we're going to much more likely leverage that. And the people expect it, because Amazon and everybody else is doing it. People do expect personalization today.
I want to plus up that one. I think
Yeah.
you're absolutely right. I think when we talk about being contextually relevant, I think of what you're talking about here, right? So we might get a third-party data source that tells us someone maybe had a life event. We're not going to say, suddenly single if they got divorced.
Yeah.
Right? But,
Yeah.
but we may talk about, as your life takes different turns, or
Yes.
as your life evolves, so should your financial plan.
Exactly.
But I think what we offer at Northwestern Mutual, and like you do as well, is holistic financial planning that starts with a personalized financial plan. It literally says personalized in the value prop and the promise that we make to our clients. And so it's very much in the duty of what we need to do. Money is personal, right? It's emotional. It's a connection. It fuels our lives. And our clients sit down with our financial advisors and tell them their goals, hopes, and dreams.
Yeah.
And we have to play that back, and we owe it to them to do that, because they've opened up, their trust and their confidence to be able to share that with our advisors, and we have to be good stewards of that and use it in the right way. So I think you move into creepy when you maybe aren't careful with that, or when you ask someone to become a client and they already are, right? So I think it's a fine line of where you need to go.
Well, and you mentioned you can see their expenditures.
Yes.
That immediately brought up a creepy flag in my mind.
Yeah.
Right? 'Cause, does that inform what you're doing, or do you actually play that back in some way?
We use it in two ways. So we normalize our transaction data. I don't know if anybody in the room is familiar with how transaction data usually comes in from a Visa or a MasterCard. It's, Walmart could show up 20,000 different ways in your transaction data set. And we partner with the vendor, because we're, a smaller shop, so we don't have rows and rows of developers. So we partner with the data to take that and normalize it, if you will. And so we leverage that not only for strategic insights, so that we can understand how our consumer behavior is changing, and on the market research side of what's happening with our consumer, but also it's a great tool for us for building audience and segmentation for offers. So we look at things like Home Depot, but not just did they go to Home Depot. How often did they come? How much are they spending? It's the RFM principles, recency, frequency, and monetary value, that we leverage. And then we take that and turn that into an audience for like a home equity loan or something like that. So we know the right audience that's maybe interested in that product
So it
offer.
sort of informs an offer and messaging, but it not to the point where it's, I know on January 17th at 3:42 p.m. you expended X.
Exactly. And honestly, people want offers that are relevant to them. They do expect that. And I think, and you said the word trust, and that is so vital, because I think that the correlation for financial institution and that emotion, the correlation between us and our accuracy on this has to be right. Like,
It's a
we have to
value
nail
exchange,
it.
right?
Exactly. And that ability for us to get it right and not be creepy, but also not be wrong,
Right.
is so important.
So I hadn't thought about this until just now, but if you respond, whether we want to call it a model, whatever mechanism you're using to serve this up, from whom is the communication coming? And it may be different, the company or the advisor?
Lovely answer of,
both.
it depends, and it's both.
Yeah.
So I think that we have taken a number of different test and learn approaches to this, and so I'll use maybe two examples. One, in a mobile app adoption win-back campaign. So we worked with our data science team to understand what is the timing of which, if someone doesn't have activity in their mobile app, we're at risk of losing them off the mobile app, and then they won't come back. And so in that particular sense, the mobile app is branded Northwestern Mutual. It's a Northwestern Mutual app. In that case, those marketing communications come from the home office and say Northwestern Mutual. And in that particular case, timing it exactly right within that window, we were able to reduce drop-off and fallout by 86%. And then we were able to maintain that performance of those people staying in and active in that app months and months ongoing. In a different scenario, we formed what we called our Deepening Client Relationship Task Force. And what that was is we brought together our field organization, our marketing organization, our data science, our privacy teams, and we looked at a group of clients, and we went to our client fact base, and again, utilizing CLV and propensity modeling, we identified segments of clients who were best looking at potentially getting a financial plan, what product they had propensity for, and then we looked at their current relationship with us. We did a test and control between going direct to certain clients from a home office perspective, at which in those emails, direct mail, communications, we always include the advisor's information as like, for your convenience, we've included your financial advisor's information, but it clearly states that it comes from us. In the test, we did work where we provided the advisor the list of the clients, the propensity related to it, the campaign that they would be within, all the creative that their clients would receive, as well as toolkits for the advisor for not only their knowledge of the products and the campaign so that they could speak to it, as well as their follow-up materials to execute on their end. In that particular case, we drove 2 to 3x the number of leads of sales opportunities and reasons to see for our financial advisors. And that campaign, the reason why is when the advisors opted their clients in, we still went that last mile for them and executed the campaign, but we did it on behalf of them, so everything hitting their clients' inboxes appeared as though it was coming from them. And so what's nice about that is we, through our MarTech stack, we have the capabilities of not only executing on behalf of our advisors, but also doing it on behalf of the company, but that trackability versus it going through an Outlook inbox provides us some really great measurement capabilities.
And ensures it's compliant as well.
It does. And I think that the other one on that, and Lynn talked about it earlier today, is our advisors absolutely are our clients too, and we had an 86% satisfaction rate of their experience working with us related to that. So I think, win-win on we drove performance with clients, but we also, grew that trust and reputation from a home office and field perspective.
Emily, is that?
Yeah, from us, we haven't done too much of this. Actually, now I'm wishing I had my own note-taking, because I would have been like, oh, I need to do that. For us, the relationship is sort of not owned by a particular person, and I wish it was more so that way. We've spent some time recently, and that's because a lot of times at credit unions, we kind of have this first day, second day mentality of first day, get them in the door. Let's talk about like a home loan or an auto loan. A lot of times that's how people find their ways to credit unions. And first day is just getting the deal booked. Loan officer, processor, underwriter, get the deal done, get it on the books. Great service during that experience, and then during that sales cycle, absolutely, it's coming, those marketing materials and things are coming from the person they're interacting with. But unfortunately, it seems like day 2, when it comes into the operations, branch staff kind of management, there's not really like an owner per se. And so we're working right now we're in the middle of really trying to decide, well, who owns that book of business post-close? Because our day 1 auto lenders aren't really, they're really getting the loans, getting the loans in the books and underwriting and stuff. So we really need to make sure we're assigning and branch assigning and looking at utilization of a member and seeing, are they mostly digital? Are they mostly, and we're going to use data to do this.
Right.
And ultimately we're doing this to not only solve this problem, but many other personalization problems. So if we have a member appreciation day, if we have a marketing mailer, which we don't do a ton of direct mail, but if we do.
We do.
You do?
We do.
And so the utilization channel, like, are they more apt to come to this branch, even though they live over here? Because we don't want to look at just where they live. Or are they coming and making check deposits and all of that? And it sounds like kind of a no-brainer for a financial institution, but it can actually kind of be complicated because maybe they stop at the east side location 10 times a month, but the west side 1 time, and it may be because of where they work versus where they live. And so we're trying to hone in on that and really get a good placement of where they are so that we can ultimately do more of that personalization. So we have like a happy birthday email come out. Well, I want it to come from the branch they most frequent. I don't want it to come from Meritrust. And so that's the kind of stuff that we're looking at. And then when offers come in, or Member Appreciation Day, or any of those opportunities that are more that personal touch, portfolio, relationship building, it's coming from a person they may know or interact.
And I want to build on that. I mean, I think one of the things that we do is very similarly is we think about what does the financial advisor consider high touch and value of what they don't want us to get in the way of, and trying to pair that in a 2x2 of what is the consumer value and what do they want to be able to do, and maybe that digital plus human experience, and we try to marry it up to find the best of the both worlds, right? Yeah. Because what a consumer might want to do digitally, their advisor might actually just want to have a conversation with them about. And I'll give you an example around changing a beneficiary. If someone's changing a beneficiary, odds are they had a life event, right? And so from a consumer standpoint, just let me go in and like change the name, right? Like just don't make it hard for me. But on the advisor side, I want to know that they did that. I want a notification about it. I want to have an opportunity to reach out to them and a reasons to see and a reason to call, right? So I think it's finding those intersection points, and that co-creation that we do with our financial advisors is a big piece of that. And how we look at that. One of the metaphors that we use with our co-creation community is thinking almost of like a manufacturer dealer. And so, if you buy, I buy a Tahoe, right? And I get, to your example, I get certain things from the dealership that I bought it from, but I also get things from Chevy. And so when we think about our experience with our clients and how we engage with them from a marketing and a client experience perspective, we tend to use that metaphor as kind of a gauge and a gut check of how we might personalize the experience for our clients. So when someone's a brand new client, we welcome them to Northwestern Mutual from the brand who they bought the product from. And that is very much in the how do you get online? How do you pay your bills? How do you understand what you bought? Where do you go to get all the things that you need to get, your tax documents? And we personalize that to what actions had they previously taken. We give them checklists of things to do, not only in their emails, but when they log into their mobile app, there's a checklist that carries that through, that continuity to get them to the end. We leave the high touch explanation of your product, the delivery of your policy statements, the onboarding of how you're going to work with your financial advisor. We leave that to our financial advisors to do, because each advisor runs their practice very differently. And so again, we try to find that intersection point, not only of how we personalize the experience and welcome them in from a client perspective, but also from our financial advisors.
It makes me reflect on what you were saying earlier, in the sense, the more you are selling, in effect, at least the potential for a holistic financial advisory relationship with planning as part of it, the more that starts to step into some very delicate areas for a lot of people, right? It's very personal. Whereas the more it's product, a mortgage, it's, I don't know, at least for me personally, it's hard to get all hepped up, I got to provide information.
It's very transactional.
Yeah, exactly.
Right? And a lot of times, and thank goodness my mortgage team's not in the room, but a lot of times the people are really, it's all about the realtor relationship during that time. Maybe not during a refinance, but during that purchase process, they're much more involved with that realtor.
Yes.
And so that makes that relationship more transactional, because they're just trying to get it done.
So do you think about that in a broader sense when you see that happening? Because it's not easy to migrate from a product that is actually by its nature more transactional.
It's not, and that's where that relationship with our frontline really comes in, because they sell our brand every day when they come into our branches, and that's why I've got to really hone in on that handoff. Handoff between the transactional type of relationships and that frontline staff that's going to care and support that loan, let's say for 30 years, though that doesn't normally stay that long, but that relationship, we have to make sure that handoff, and those teams they need to work really well together, right, in that handoff. And so we do have things in place in our CRM to help us do that, so that we can help migrate a mortgage relationship to a full relationship, and then really understand and then that's where the data comes in.
Yep.
What should we upsell and cross-sell to our members next? And then we use something that we just rolled out recently, which was an engagement score. This was incredibly beneficial for our frontline staff to see. We have it in our CRM front and center. You can score, and I'm sure you guys have heard like spend, save, the pillars. It's very trendy these days. We use it for a score, and members can have up to 5 points, and we look at our average score. It's a board metric, makes it very important. Their incentive package in retail is built off of it.
Oh, wow.
And that's the game changer right there, right? It's like if you have people that care about the holistic relationship and they have that opportunity to have conversations and build on that relationship, and then they have the CRM data right in front of them saying, Joe Smith, member, 3 points, and here's the opportunity. They were immediately jumping on opportunities to engage more with them and take them from just a mortgage customer to a checking customer. Yeah. Oh, and our score is built on much more than binary, yes, they have a checking, no, they don't. Because that's the thing, is that you have to take it out of the transactional. Mm-hmm. And so we look at things like swipes, average, so they don't really they don't get points for a checking account if they just have it. They actually have to swipe their debit card to be activated into that pillar. Same thing with savings. They actually have to save a certain dollar amount in order to be activated in the pillar. It's not just they have the product. So that's some things that we've changed recently, so that we're not just looking at yes, no, do they have these products? It's yes, no. Are they leveraging? Are they using? And are they building? And then we activate our frontline staff to then help increase those numbers, and it really has empowered them.
Mm-hmm. I'll bet it does. So let me shift gears a little bit. We're treating the data as though it's all I have to do is pull up the screen and there it is. Mm-hmm. Talk a little about.
If it was so easy.
Yes, yeah. I have scars myself on some of this, and
don't we all?
Yeah, I think so. But talk a little about the technology platforms you're using today, mm-hmm. what some of the challenges are, and maybe some stuff that's in process. Because at least for me, and I imagine for all of us, technology, it never ends. I mean, even if it's the same fundamental platform, we're always adding to it, connecting something to it. This isn't working right, So give us a flavor of what that looks like, how it helps you keep track of what are ultimately large numbers mm-hmm. of I don't want to just call them transactions, of data points, mm-hmm. really, and how it supports scaling up to make this something where you don't have to hire another 25 people that management's not going to let you hire. So.
Well, I want to go back to something that I think has been a common theme in many of the discussions today, is what business outcome are you trying mm-hmm. to drive, right? So personalization for the sake of personalization is not going to deliver value, and as a mutual company, we are owned by our policy owners, and so it's number one inherent that we're doing the things that are ultimately going to drive policy owner values mm-hmm. so that we can give dividends back to our clients, right? Mm-hmm. And so to your point, data is expensive, tech is expensive, particularly in a 167-year-old company where, we don't have the benefit of starting as a digital first, mm-hmm. where like you built it how you wanted it, mm-hmm. right? We're stitching 167 years of data and insights together across multiple platforms. Mm-hmm. It's not easy. So I think for us, we started with what is the outcome that we need to drive, and I'll use existing clients as an example. Mm-hmm. Is it cross-sell, upsell for an additional product? Is it to get someone who doesn't have a financial plan to get a financial plan? And then we married the data and the most important insights related to those outcomes. Mm-hmm. Well, what's the barrier getting in the way? How are we best going to engage with them? And what data, from a personalization standpoint, do we believe is going to be the most critical to move that forward? And then we tried to standardize it across all of our campaigns, so that every time we're going and working with our engineering and our data teams and our digital product teams, we're not asking for something new. We're asking for a different way to cut it and segment it and activate it. So we have a CDP in place that the marketing team has an opportunity to do self-serve, segment our client base, create mini segments, and utilize that to activate our campaigns. We use Salesforce Marketing Cloud for our email platform. We have a number of different direct mail solutions, partially because we have some legacy programs within the company that go through ancient like ETL files that go to a print shop, but it works, and like you're not going to spend money
Yeah.
on something that's working. And then we utilize an outside printer for all of our test and learn. So we utilize a printing partner for any of our direct mail that's going into a campaign that is not yet proven. And then once we prove the campaign and then we fully automate all of it, then we look at how we bring certain aspects of it in-house and connected to our MarTech stack. We work with our data partners. There's a big emphasis right now on, call it something that ends in a DP, right? Like CDP, UDP, all the things. But unifying our data across the organization is an enterprise strategy of which we're hooking into. Again, allowing all of us to be able to do our work more efficiently and effectively.
Painful process, I imagine.
Yeah, it's not easy.
And though our scale is a little differently, very similar strategies. That's what, I would say about a little over 5 years ago, we had taken the approach of unifying data across all the platforms so that we could get all of our information into a data warehouse, and then, magically everything would work together. Not quite there yet, but I think the most important part for our area and growth strategies and marketing is really that great partnership that we have with our data team so that we can self-serve where it makes sense. And then, because there was no, prior to in the last couple of years, there was no self-service. And getting a audience list straight from our data team was incredibly difficult.
It took us 16 weeks.
Yeah, and because there was a lot of back and forth, and it never really hit the mark. And we were definitely, talk about like, back to our earlier, not building trust with members because the data wasn't right. It's not that they don't know how to write the SQL statements and do the things and whatever, but there was just other things that were happening, like, there were private banking members in there, and we shouldn't have offered those. Talk about personalization. The private banking members or
hands up.
Yeah. Please don't. Yeah, exactly. They want to do all the
Special treatment. Alarms go off.
Yeah,
they should.
Tornadoes happen. Sorry, Kansas. And so, so the great partnerships with that data team. Building trust, getting to a self-service model. We use Tableau. We have access to our data warehouse, and we're have a CDP and a CRM that help us get there. We use Marketo for our marketing automation platform for email specifically, and then we are very ambitious and decided to build our own CRM, so that's been fun. So anybody that wants to talk about CRM development, feel free to find me. And then, but it's live and our frontline staff all uses it, and it's been really great, but definitely comes with its own challenges. But the whole point of it, though, is really to help understand what our customers' wants and needs are.
Yeah,
I'm so
every
tempted to
vendor
ask you
in here
about your
every vendor that
in-house
works on
CRM
CRM
development.
is now going to call you.
Yeah, no, for sure. Come. Credit unions sometimes like to build their own things. And so there's a concept called a CUSO, which is a credit union service organization. And so we've decided to do that instead of buying one off the shelf. And I had mentioned earlier about our new engagement score. We had built this really great data visual that we had live in weeks in our CRM because we had built our own, and so we were able to get that to market really fast. So there's some benefits of that, but I think that back to your question about data and our stack, it's so important. And if anybody hasn't really got quite there and have been stuck in the big billboards and the smaller shops that haven't been able to get to some of that personalization or even how to prove it, I think the best thing is just to test. Start some tests, do some A/B testing, build some audiences, see how it compares, create a test of people that you think do need personalized marketing, and then just a random sample and see how they have been activated for a certain product or service.
To build on that, I think the other is like, don't quit.
Yes.
Right? Like the first time out of the gate, you're probably not going to hit stat sig.
Yeah.
More than likely. Let's all just be honest about that, right? Particularly when I think about my team, I built our client marketing team basically from the ground up.
Yeah.
While we're 167 years old, our client marketing team is about 6 to 7 years old. Everything that we did from a client marketing and a client nurturing perspective was done through our financial advisors locally in the office. Only recently, with the evolution of the client experience, the data that we have, the tools that we have, and the return on investment are we enacting and engaging directly with our clients from a home office perspective, from a cross-sell, upsell perspective? And I think, our planning campaign, as an example, the first time we did it, we did not hit stat sig and over our control group. We leveraged personalization about life stage, planned status, and a few other tweaks to it, and continued to refine and optimize. And if we would have just quit the first time out of the gate, we wouldn't be where we are.
Yeah.
And now we send that campaign twice a year. And we are driving anywhere from $15 to $20 million of incremental sales on an annual basis over control. And so I think that's where, and that's just one campaign we do twice a year, right? And incrementality and plans delivered to our clients. And so I think those are the ones where people that don't understand marketing might say, well, it didn't work, move on to the next thing. And so there's an education that needs to happen within your organization on how and where you need to build a roadmap of optimization and testing to ultimately reach that point.
Yeah, and I think earlier somebody had said, be scientific. It was and so I think that's the really important part. And there's so much that you can go out and just Google how to do a market, regardless of it being a financial institution, how to really execute on a campaign like that. And I think the other thing, just to add to that, is be willing to learn more about finance. If you can put something into a simple way for your CFO or your executive to talk to your CFO about how there's ROI and results in this trend, that speaks volumes, and you'll get more poured into your department and the direction you're going, and more leeway for testing. If you can just learn how to trend something or speak financial terms to your finance guys.
Well, I think it's tying into the business outcome, right? So we have multi-year strategy, AIP, our annual incentive pay. We have goals across the organization that everybody has. We translate that down into our team level goals. Our team level goals are specific to sales impact and revenue. And so it allows us to show up in the organization speaking the language that matters to the rest of the organization. If we would have showed up and said, we engaged 2 million clients, and in the purpose of what, right?
Impressions mean nothing.
Right.
Yeah, or click-throughs or something like that. Now, showing how that impacts the average time a conversion happens to this type of net interest margin for a certain product, whatever. That's what speaks to them.
Right.
So the finance is one of the major, I don't know if I'll call it a barrier, but one of the hurdles you have to cross. You touched on this earlier, but in addition to end clients getting incorrect data, my experience has been incorrect data sours internal people and 100%. Intermediaries to a great extent. How do you get some grace from them? Because besides begging and pleading, it can be very difficult sometimes, especially if they feel their compensation's been affected in any way. Are you experiencing that? Or?
I on that engagement score that I was talking about earlier, that was tied to the our retail incentive package. Definitely there's a lot of challenge with that, because it's the first year you roll out a new metric. And I think at the end of the day, it doesn't matter what metric or board metric or incentive metric you're rolling out, if it's related to what we're doing or retail, for something completely different, like Reg E opt-ins. I think that there's going to be a heavy skepticism in any kind of rollout, which we just kind of look at it as an opportunity to refine our metric and make it more transparent and better. So I just kind of flipped the script on my mind on kind of thinking, okay, we're going to get a lot of critique, and it's going to be, and we just also set expectations. The first 6 months we're learning, we're getting the feedback, and we're learning, and then we'll do stuff like adjust some things that, like, okay, we understand this perspective, and we'll maybe adjust some things on the incentive package. Not completely, but to kind of meet in the middle as we find out things, because we are definitely in that MVP. We MVP this. We're putting out a new incentive package. We're going to MVP it, and I think that the entire culture has to shift at your organization to do something like this.
Is that your experience as well?
Yeah, I mean, I think in a slightly different scale, when I think about building advocacy with our financial advisors, right? If we get them involved at the beginning as we co-create with them, the way that our system works is you get the best advisors to talk about it because everybody wants to do what the most successful advisors are doing,
the
right? They
influence.
literally will sit there and record their red letter language of how they call their clients and what they say. And so we specifically look for influencers internally, right? We find our best advisors who are doing the things that we want them to do. We get them involved early, we get them to advocate, and then we get them to promote the programs that we want to bring forward. And that has been a tremendous amount of help because it's not us telling our advisors to do something. It's, hey, your constituents and your peers feel like this is a worthwhile piece. We've tested and learned in a small pocket to have data to back up that we think it's the right thing to do, and then we roll it out more broadly, and I think that's been really successful for us.
We've done some similar things with starting early, because what I've noticed is if you get really excited about something and then you present it to those type of people and it's all packaged up and done without their input, it makes it a lot
it's dead in the water.
It's dead in the water. So you've got to start early with the conversations and get their input, even if you would have come to the same conclusion.
That's a lesson worth recording.
Yeah.
That is, I think, the easiest way to kill someone.
Yeah, and especially those that is so important. We don't quite have those golden, the golden, sellers or whatever, but we do have influential people internally that really do kind of make or break the success of something new.
100%.
So I have more questions, but we're running into time constraints. Let's see what questions anyone here may have. Dun, 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 dun. We're going to wait for a mic. Let's go far, and then we'll come back over.
Okay, I'm Sarah, and I work with insurance, but how much energy do you put into new prospects compared to current clients?
Oh, that's a great question. Someone said earlier today, your greatest prospects are your existing clients, right? And I would say we have to do both. I would say in a split on my team, we're probably 60% existing clients, 40% prospects. Now, how we define but I want to be really clear, how we define a prospect is someone who's one-to-one connect with a financial advisor versus out and, from a top funnel, bringing them all the way in as a lead of someone raising their hand who wants to get matched with a financial advisor, and also enabling our advisors to do that and go to market and find their own kind of leads and prospects. And the reason why we do that is once they're in the sales cycle, it is a very delicate dance of where that advisor is in that sales cycle and where and how we believe that we can help influence and nurture someone along. I would say, again, because we're relatively new in that space over the last number of years, we are co-creating with our field right now on specifically where in the prospect funnel we can make the greatest impact for them. We found some stat sig opportunities post-plan without a purchase, and now we're moving up funnel to try to find some additional pieces. I don't know about you.
For us, it really depends on the product that we're offering, or what's really going on in the market, because are we doing a CD campaign or are we doing a auto campaign? Sometimes that's when we are going to go out and put a billboard out or a commercial or kind of be a little more blast email because of what's going on in the market. And it's been a lot more volatile this last couple of years than ever. But for those 365, always on, much more strategic thinking, leveraging the data, there's more of an emphasis on prospecting our current clients and keeping up with retention and attrition prevention and engagement more into, adding more engagement points to our membership. So that's how I see it, is much more strategic on that side, and then not that there's not strategy to content and creative on the brand and the bigger picture stuff, but sometimes you really are just trying to get CDs in the door, so you try everything.
Agree.
We had another question over here. Who has a mic? There.
So I really liked the technology question that you asked, and hearing the response of the different systems that you use for the different channels, different use cases, and so forth. I guess my question is, in those different channels that you mentioned and those different systems that you're using for a marketer, what type of complication does that bring into the marketing system to be using so many different systems while still moving customers through a specific journey type with that separation, if you can speak to that?
For us, it's really having a strong data warehouse CDP. So you got to have your customer data platform connected to all of those systems if you really want to activate across various channels. Because we've definitely been in the space and still sometimes are in the download list, upload, deploy across various things. And we do that, and then we check against the data and bring it back all together. Definitely built many of campaigns doing that. It takes a lot more energy expended within our team, but it's not that difficult as long as you have a team that can kind of understand primary keys and matching back and things like that. And having a really phenomenal team helps in that space too.
Jill, last words, because I got to wrap this up.
Oh.
Yeah, I mean, I think you're absolutely right. It creates difficulties, but we work through a CDP, we execute through Salesforce. When leads are generated for our advisors, they go into our advisor CRM, right? And every advisor has their own view into a CRM system. And those are all different platforms. And so it's more costly, but it's less costly than implementing an entirely new CRM system for 8,000 financial advisors and all their teams, right? So you have to weigh the cost benefit of where you're already driving the right behavior and building upon that.
So I have a feeling we could keep going. I'm terribly sorry we didn't get to your question, but I'm sure you can approach either of the ladies separately afterward, but I've got to draw this to a close. So what a great conversation. Thank you so very much.
Thank you. All right.